Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. Artificial intelligence is going to be disruptive in a lot of different ways, but I think we can already see that there are some companies that are going to be disrupted just from the fact that a lot of these tools are available now. Three that I wanted to dig into today are Getty Images, Fiverr, and Upwork. These are all companies that are related to freelance work and connecting users with people who are creating content. And artificial intelligence may allow some people to create some of that content themselves. So I wanted to dig into what the potential disruption looks like and what the future of these businesses and these stocks may look like as a result. My name is Travis Hoium. Thank you for watching Riiv Investing. Please subscribe here on YouTube for all of my investing content. Now let's dig into exactly what's going on in artificial intelligence and why I think the image piece here is going to be more and more important for all three of these companies. I want to start here with a look at these companies' profitability or lack thereof, and just show that we're still in what should be a growth phase for this industry, and then look at the market cap of each of these companies. I think it's interesting that Getty Images is the largest market cap. This is a company that just came public via SPAC merger last year, and then Upwork and Fiverr are both less valuable. But I think that actually doesn't make a lot of sense thinking about the future of these businesses. Now, I bring up the image piece here because I think that's where disruption is going to be seen first. We're seeing a lot of attention with things like ChatGPT and how that could disrupt search, but those are really big companies that are going to be disrupted. Something like Getty Images is a classic example of a small business that doesn't have a ton of scale that could be disrupted by a simple subscription to a product like Midjourney or DALL-E. I'm a subscriber to Midjourney myself, and I'm finding myself using that more and more instead of using Getty Images and trying to look for images either on the Getty platform or on Unsplash, which they own as well. So does this kind of break that business model? And I think the answer for Getty specifically is yes. We're starting to see that in the numbers. Let's dig into a recent earnings report. This is Getty's fourth quarter earnings report, and there are a couple things that are, I think, pretty shocking here. Revenue was down 3.2% for the year. On a constant currency basis, it was up 3.5%. But net loss was $23 million compared to a profit of $41.5 million a year ago. Here's another red flag. This is the annual subscriber revenue retention rate. So you want this to be over 100% because this is basically how much is each customer going to spend next year. A growth company is going to be growing at over 100% because they're able to squeeze a little bit more out of each customer. That number is falling for Getty Images, 104.5% a year ago, just barely over 100% in this most recent quarter. That's despite the fact that there are more customers, there's more download volume, there's more video content. These are things that should increase pricing, but it doesn't seem like Getty has a lot of pricing power. Even for the full year, they're looking at 1 to 4% growth year over year. That's not great. Adjusted EBITDA of $305 to $315 million could be good, but keep in mind, this is a company that has $1.4 billion in debt on the balance sheet. So you could argue that this is a very highly leveraged company that's actually losing a lot of momentum in its business. The problem for Getty Images is that something like Midjourney is just going to completely replace their business model. Some customers who have been subscribing to Getty Images will either say, hey, we're not going to pay the same subscription price that we were paying before. Maybe we'll cut back on what we're paying for, because we have this new tool that will create any image that we want simply by putting a prompt into the AI. That's something that it's basically impossible for Getty Images to compete with. That's where I want to contrast with Fiverr and Upwork. I think Fiverr and Upwork could actually benefit from something like artificial intelligence, but because it allows creators to outsource that to other people. Let's say that you're a growing number of prompt engineers, people who are experts in writing prompts for images, for these large language models. That's something that's going to be really valuable for companies, particularly small companies who don't have big budgets to hire specific people to do work. So they outsource it to platforms like Fiverr or Upwork. Now they're going to be able to find people who are experts who can create an image, and maybe that image only costs $10 or $15 or $20 as opposed to it costing a few $100s just as recently as a few months ago. That could be a potential growth revenue. That could be a potential growth driver for these companies. So I don't see it as being quite as disruptive for Fiverr and Upwork as I do for Getty Imagers. That's really one way to think about artificial intelligence, is how is it going to disrupt the business model behind these companies? Getty Images, I think it's no coincidence that they completed their SPAC merger in 2022. They saw a lot of this artificial intelligence coming, came to market as quickly as they could with that SPAC merger. The market hasn't liked what they've seen with companies like Fiverr and Upwork recently, which were very highly valued during the pandemic. But I think long-term, there is a case for these being a couple of really valuable pieces of the value chain. It's a two-sided market where there's buyers and there's sellers. The more there is of each, there's going to attract the other. And with more and more freelance work happening around the world, I think this is going to be a growing business. Artificial intelligence could actually be a boost to that too. So that's the way that I'm thinking about these stocks right now. Getty Images is one that I would absolutely stay away from. But Fiverr and Upwork, I'm going to give it a couple of quarters to see how this goes. But I think this could be a tailwind behind them. And given their growth numbers over the last few years and how many more people are using their platforms, I really like where they're positioned right now. But what do you think about these stocks? I'd love to hear your comments in the comments section below. Follow Riiv Investing here on YouTube. Thank you for watching, and I'll see you here next time.